Where is sterling headed, given what the likely outcomes could be?
So we don't have a position on sterling right now, but I would be inclined to short it on any rallies from here. I think the vote today, we're going to vote against the no-deal Brexit, then there's going to be a request for an extension, and that's just going to open up a lot of uncertainty, and there's going to be a lot of twists and turns, and whenever there is uncertainty, that's just continued drag on the UK economy. It defers capital expenditures, it pushes capital expenditure decisions away from the United Kingdom towards Europe or even America or anywhere else in the world, basically. So the extension may seem like good news as we're not having the most terrible outcome, which is the no-deal Brexit, but it just creates continued uncertainty. So if there are any rallies because we get a vote to not have the no deal, that doesn't mean there won't be a no deal in the future.
So we've been, over the past 3 months, generally speaking, locked kind of in a range of $1.33 on the upside for sterling and about $1.25 on the downside as well. We're obviously closer to the high end of that range. Do you feel as though whatever the scenarios do become, that we are due for a bit of downside and testing that lower end of the range again?
Well, I don't think we'll test the lower end of the range unless the no-deal outcome becomes something that goes from an outlier event to more of a possibility. Right now, I still think it's 10 to 15% chance. You can't say it won't happen. The only way it will happen is by an accident. But the longer we go and the closer we get to the next cliff edge, which is almost inevitable at this point, that no deal just becomes a chance again. So I don't know if we'll get to the low end unless that becomes a real possibility. Right now, we're not there, but I do think sterling has to drift lower because there's a lot of negative outcomes that can happen about a general election, a Theresa May resignation, moving towards the cliff edge again. All of these things should push pressure on sterling, I think.
There are a number of folks in the United Kingdom, both on the lawmaking side and even on the economist side of things, who have cited the relative performance of the UK economy versus the European continental economy. Take us through how you view that as an investor, and is there a way that you can perhaps position yourself to profit from any kind of a scenario involving this kind of a Brexit situation, maybe resolving or not resolving itself?
Well, if the scenario does get resolved, I still think the most likely scenario is that a deal similar to what May has put forward does end up getting eventually approved. I don't think that's a 50% chance, though. So I think it's the most likely outcome, but I don't even think that's a 50-50 chance. The UK economy is benefiting from the weaker sterling that we've talked about. It's being punished because of the apprehension and uncertainty this country faces, but it's also facing the headwinds of the uncertainty on capital expenditure. I don't think the UK, with a deal, is actually going to start rip-roaring the economy and doing incredibly well. As you move away from integration within the EU, there's still going to be lots of questions. There's still going to be lots of headwinds. The banks, the financial sector in this country have moved thousands of jobs already from London, and I think that'll be an ongoing trend. So I'm not inclined to bet on the cyclical side of the UK assets right now. If I was sure there was going to be a deal, I'd probably still be inclined to buy the UK large caps, which are more driven by global factors than the UK economy at this point.
Are there places within the UK and large caps that you like more than others, Patrick?
I love the oil companies right now just because they're incredibly efficiently run right now. They've got capex projections based on $50 to $60, and we think that's going to be the long-term average going forward. So we think their dividends are sustainable. You're getting 5-6% dividend yield on Royal Dutch Shell, BP right now, trading about 6 times enterprise value to EBITDA. Those are very attractive valuations. It's a way to invest in the UK that's not driven by the UK at all. And I think as a global investor, that's where I'd be looking within the UK right now.